we go, should be able to see it now. I've just started with the multiple CSIs I've got the VIX, I've got the multiple CSIs, we'll hop onto the onto the US indices and just see where everything's going, and basically nothing is going anywhere at the moment. Everyone's going on holiday and pretty much the markets are done. The yen you can see here is flip-flopping around on all the time frames. This is 1 minute, 3 minute, 5 minute, and 10 minute. You know, it's really got very little direction. The Aussie, yeah, there's some buying of the Aussie, but it's, you know, against the yen, there's no strong trend there at the moment. And there's a lot of bunching. When you see this sort of bunching going on, what the currency strength indicator tells you is many things about overbought, oversold, strength of trend rising, strength of trend falling. But what it also tells you, when they're flatlining or when they're bunching in the middle, there's congestion. You know, those particular pairs or those particular currencies are really not going anywhere, but you know, in a hurry. And really, all of that is reinforced. If I just pull the VIX across here for you, just make that a little bit larger right now. There we go. That's it. This is on 2 minute, 5 minute, 10 minute, and 20 minutes. So basically, this is the VIX, and this is what it's doing right now. It's congestion on 2, congestion on 5, congestion on 10, and you know, we had the decent rally earlier on, or the decent move lower for it, and now it's just gone into its shell. That is basically telling you loud and clear that there's not a heap going on in terms of risk. There's no strong sentiment one way or the other, and really that's what we're seeing in terms of the multiples. The volume point of control is in evidence all over the place, and if I go over to the NQ, which I've got another workspace, multiple time frames, which is this one, there we go. So this is the NQ. I've got the 15 second, I've got the 1 minute, the 3 minute, the 5 minute, the 10 minute, and the 15 minute. So it's a pretty fast workspace, if you will. And again, what it tells you, everything is telling you the same thing right now. The volume point of control is here, it's here, it's here, it's here, it's here, it's here. So it's on every single chart up to the 15-minute time horizon. So the market is just trading around that fulcrum. That it is the fulcrum of the market. It is the point at which price, to use market profile terminology, the market is in agreement. There is no strong divergence. There's not sufficient bullish or bearish sentiment to drive this market in one direction or another away from the VPOC. So it's going to sit there, and the analogy I've used many times is the seesaw with two people of equal weight. That's how you can think of it. When one of those people gets off and somebody heavier or lighter gets on, then the market is going to move. Then that seesaw will move in one direction or another. It's exactly the same principle here. It takes weight of effort to move the market away from the VPOC. It isn't there right now. It's just sitting in this congestion zone, and it's just waiting and being patient. We all know why it is, because we're ahead of a 3-day holiday, and you know, 4th of July and everything else. So, and it's 20 past 6 UK time. So you know, there's another couple of hours to run, and most traders will have gone, certainly will be thinking of going home if they haven't already gone home already. You know, we've had the NFP, been and gone, done all the excitement, blah, blah, blah. And, you know, it's really just the fag end of the session. The other point about it is that if you have to trade, if you are an out and out scalping trader and you're either trading order boards or you're trading flow, you're scalping, then the only way you can do it in these sorts of markets is move down to these very fast time frames. I've just popped the 15 second up here. We've got a burst of activity. We've got a volatility trigger. What do we expect? We expect the market to congest into that, possibly reverse into that. If it carries on, fine, we can jump in again. But what we're waiting for is a possible reversal into that particular candle. Decent volume under that one, wick to the upper body, goes up to the top of the chart here. So we're looking for a possible reversal, possible weakness, possible reversal back down lower again. If it doesn't, if it carries on through there, then you know, it's an opportunity to scalp again. And if I just collapse that back down again, let's just see what's going through on the time and sales. Not a huge amount. No big volumes, no blocks going through there. It's all ones and twos again. It's speeded up a little bit. But now you see what's happening. All those traders who jumped in there as a scalp to the upside, they're now getting trapped because the market's congestion. It's going to reverse, or at least congest. It may not reverse, but it'll certainly congest. And that is the trigger of the fear of missing out. It's extremely powerful. This indicator, as you may or may not have seen, triggered in real time. In other words, as soon as it moves, the price action moves outside the average true range, that indicator triggers. You don't have to wait till the end of the candle. Now on a 15-second chart, it's neither here nor there. But on a 5-minute chart, it is important, or a 3-minute chart, or a 10-minute chart, or a 15-minute chart. It triggers as soon as the condition that the price action has moved outside the average true range has been met. Doesn't wait till the candle closes. So you get the signal as soon as possible. And what that tells you immediately is that there is participation by the market makers, the big operators, the insiders. You'll see it reflected in volume. Now, sometimes you see these on low volume, but generally you see them on high volume. It's a trap. Why is it a trap? Because it's designed to pull you in on the fear of missing out, the FOMO. The market snaps, your instinct is to jump in, take some quick money and get out of the market, and generally that isn't what happens at all. The market reverses and you're left stranded in a weak position. So if you have the indicators, this is an immensely powerful indicator. And as you can see here, works in all time frames, works on the 15-second, it'll work on the 15-minute, works out to the daily. You saw it on the daily chart on the YM. Can't remember whether it was on the ES, but certainly on the YM, it triggered on the daily chart. We've had the little pullbacks, what we expect to see. Now we're starting to see the market rally. Got decent volume under here. It's an opportunity to trade. These are points worth having. If you're a scalping trader, you've got to be quick on your feet at the moment because, looking at the charts, let's see what's going on in terms of a much slower time frame. 5-minute may not sound slow, but it is when you're scalping, I can assure you. We've now got, and this goes back to what I was saying about the gold chart, and a very similar thing here. Got a volume point of control. We've got a decent level of resistance, which built here, was tested, didn't break. Now we've got a breakaway. Got a breakaway on decent volume, nice widespread up candle, decent volume. Got some minor resistance overhead. The volume here, we've got a lot of it, which is falling away up to 420. So, we've got 20 or 25, 20 points to go up to here. But at least it's falling away. We haven't got any low volume nodes in here, which is not a good thing. But nevertheless, there is an opportunity there. We've got very little in the way of price-based resistance, but we've got a ton of it in terms of volume-based resistance sitting in here. So, that's a decision you've got to make. Am I comfortable with that moving to the upside? Let's go down onto a slower time frame. Let's go to 3 minutes, see what that looks like. That's not so bad. We've got some minor resistance here at 405, so a few points above, but then if we get clear of that, then you've got volume falling away on the histogram, which is nice. So that should give it a decent run if it breaks through that region here and gets through this level here where we've got the volume, and then it steps away and starts to fall away quite dramatically. But remember, we are coming into a holiday period, so this is not a market to hang around in. As you can see, there's reversals all over the shop. Got to be quick, got to be light on your feet, in out. This is not a market to sit in a trend for hours, or certainly not even handfuls of minutes either. It's scalping. It's pure out and out scalping because that's what the market dictates right now. It's perfectly feasible. May not be your style of trading. That's perfectly fine. You just sit on your hands. You wouldn't be trading this. You'd be waiting for a day next week to come. You can see these blocks. See these blocks going through. There's 44 went through there. 13 went through there. Big numbers going through there. And you want to see whether they're at the bit of the ask, or the inside or the outside. And in terms of that volume, did it actually drive the market, or did it not drive the market? Because if it didn't drive the market one way or the other, then it's a sign of weakness. And that's what you're looking for. You're looking for those big blocks going through. These ones and twos are not really relevant to any decision making. It's the big blocks you've got to keep an eye on. And one of the things you're going to be doing with TradeStation is actually developing some software which will make this a lot easier, so that you don't go number blind looking at this. We'll actually develop something that makes it much more straightforward to actually identify what is happening. But it's all based in terms of VPA analysis in conjunction with the order flow and time of sales. There we go. We're just hitting resistance again. Into congestion. As I said, when the markets are this sluggish, and the reason we have that little burst of activity, if I just pull over the VIX again over here, if I can get my cursor around, keeps disappearing. Where's it gone? There it is. Okay. Just pull that over again. The reason we had that little burst of activity was we had this little rundown on the VIX. So when the VIX falls, markets rise, and vice versa. So we've had the breakaway, and you can look at this in exactly the same way. You could draw some lines on here. I haven't got anything on at the moment, but you could say, well, that's the support, and that's my ceiling of resistance up there somewhere. So once that gets breached, then we're into another breakaway from a congestion phase. It just happens to be on the 2-minute VIX. But the principles of everything that we teach and the way of trading are universal. With you trading multiple time frames, applying VPA methodology, whatever it is, it's all universal. So there we go. I think we're going to wrap up there because I don't think the market's going anywhere fast anytime soon. Just point you at one or two of the sites. This is Quantum Trading. This is where you'll find all the indicators, MT45, NinjaTrader 7 and 8, and TradingView. And I must stress the license for MT45 is one license. So if you buy that, it covers both platforms. You manage that through the Quantum Trading dashboard. The same on NinjaTrader 7 and 8. You decide whether you want to run on 7 and 8. It's the same license which covers both. You just have a different download. TradingView, we're going to come back onto as soon as we finish TradeStation, because there's some indicators that we can now port over to TradingView. Now we've got line and object drawing available, which wasn't available at the time on the Pine script, but it is now. So we can actually develop those indicators, which we weren't able to, which were the currency matrix, the heat map, the array, and one or two others. So will there be a full suite on TradingView? TradeStation is coming soon, 9.5 and 10. 9.5 is TradeStation Global. So if you have an interactive brokers account, you can link it straight through to TradeStation, and you will have all the bells and whistles of TradeStation with the advantage of trading through a deep discount broker. And you can trade through the IB platform, or you can trade direct through the TradeStation platform. So it's just a very powerful combination. TradeStation Securities is version 10 and above, and that will have all the bells and whistles too. Plus, obviously, it's got radar screen and all the other lovely things on that particular platform. So it's very powerful. We will be doing TradeStation specific webinars, of course, in due course. So please keep an eye out. We've posted something up in Labs, but we will keep you up to date on Labs as well. This is where you find Anna, annacooling.com. All the books are there in Kindle and paperback versions. And you can find the latest blog posts and various other bits and pieces there too. And then finally, on the Forex trading program, this is where you'll find it, quantumtradingeducation.com. It is a complete Forex trading program. It covers everything: psychology, fundamental, relational. There's a deep dive into VPA, as you would expect. Relational is to do with related markets. Technical analysis is a deep dive into VPA. And finally, there's a mechanics of trading module. And then you've got a whole raft of webinars underneath here as well. VPA chart examples, how to use the indicators, pulling it all together, topic webinars, webinar library and resources. There's over 200 hours of video plus in there. And in addition, you get to join the private trading group, which is hosted by Anna and myself in the VPA traders chat room. So it's all there. Thank you so much for coming along today. I don't think we've got any questions. Nope, that's fine. Hope you've enjoyed today. We will be back on Tuesday morning, 7:45 UK time for the London Forex session. Enjoy the rest of the trading day. I don't think it's going to be very productive, let's put it that way. And tomorrow obviously is not a good trading day. Maybe something will happen in the morning, the London session for trading Forex, but certainly be cautious about market liquidity with the US markets predominantly closed, so just be careful. We will see you back here next week. Have a great weekend, and thank you so much for coming along. Hope you've enjoyed it, and see you again soon. Bye for now.